This model that is audit and assurance, as I discussed with Anas, this model is kind of different from the model called audit and strategy, because we are going to see two different approaches, even when some parts are similar. But this model is a little more related to internal audit, understanding internal control, and why is important to have a very strong internal control, what are the benefits. So basically this model, I will say, that is more based on internal audit. This model is more like an overview of the audit and based on internal audit. So I would recommend you that watch the two videos, this and the strategic audit, the strategy audit model. So this is an overview. The number of topics here are only 4. In the other model, in strategy audit, were 6 topics, I guess. So in the other model, we have 3 classes. Now in this model, we are going to have 2. And the evaluation is basically the same process, even when the topic is different. So keep in mind this, that even when the evaluation is the same, you need to develop different content in each module. These are the rules. Please participate, and if you don't understand something, please let me know. And this is the structure of our module. Today we are going to review 2 topics. One, to understand the internal audit principles, and the second one, to understand the external audit legal and professional requirements. And then we are going to review 3 and 4, but this will be tomorrow. So this, as you know, this model is called Audit and Assurance. But I would like to start to explain what is audit and what is assurance, and what is the difference between of these 2 concepts, and why these 2 concepts are very important. And basically, assurance is a positive declaration. To give confidence is basically a promise. So if we talk about assurance, we are going to talk about a positive declaration, something that make us trust in something. Assurance can also refer to professional services. I don't know if you have seen, for example, the web page of these audit firms, normally the big 4 audit firms, that sometimes these firms offer assurance services. So it's very common, if you go to these pages, they offer audit, tax, different kind of services, and one of these services are called assurance. Why they call assurance? Because normally these assurance services are provided by accountants, lawyers, and other professionals with the competency or with the knowledge to give this positive declaration. I mean, for example, if we talk about accountants, probably the accountants that give this positive declaration needs to be a professional accountant with an international certification, maybe ACCA or maybe ZFA or maybe CIMA, I don't know, but they need to prove their knowledge about the professional services that they are providing. So if we talk about accountants, but also we can talk professional services, maybe provided by lawyers or other professional, maybe actuaries or a task specialist, but they need to provide the knowledge in this field to be able to give a positive declaration that basically is assurance. And assurance services can help to the companies to mitigate risk and identify problematic areas. Assurance basically is a process in which one person or a team will review the company to mitigate risk, to identify risk and to create strategies to mitigate this risk. Or maybe the company has a problematic area and assurance services could create a plan to solve this problem, this issue. For example, audit is the perfect example of assurance services. Maybe is the most common, but it doesn't mean that is the only one. We can have a lot of assurance services, but probably the most common is audit. Audit, I will say that is the most common because of the impact that audits that have in all the environments. If we talk, for example, about a public entity that needs to report to certain regulation or to certain regulator, obviously audit would be essential. Obviously, assurance service. If we are talking about assurance service, important service. So to understand the assurance and audit, and this is a graph in which we can see maybe is everything. In assurance is all the opinions. And why? Because this positive declaration looks for mitigate risk, or these assurance services are used to mitigate risk. Examples of assurance, as I said, audit is the most important or maybe the most common. But also we have another service for assurance services. For example, financial accounting advisory service, that this is a kind of service in which some professionals give opinions or review compliance in the company. How is the internal control in the company, and if the internal control is working in a good way or not. So this is another type of assurance, financial accounting advisory services. Or maybe it's a company, let's imagine, maybe it's a company, a medium-sized company, that this company is looking for take the next step to becoming a big firm or a big company. So probably this company is looking for a strong internal control. So financial accounting advisory service could be an option to let grow this company to the next step. So this is an example of assurance services. Other example could be, for example, forensic and integrity services, that this service is more based on the protect the reputation of a company, or solve problems that are associated with the reputation and with the value of the firm or the value of the company. So we can find forensic and integrity service in assurance services, or probably we can find IFRS services. I don't know if you know about IFRS, but basically IFRS is an international framework that many companies are used are using in terms of accounting reports. So, for example, in a certain company needs to report to another company in another part of the world. So this company needs to create all the financial statements according to IFRS, but IFRS are not easy to understand. So probably assurance service could be a way in which the external part could provide this guidance in terms of IFRS and technical issues that maybe the accountants of the company could have to report in this international framework, no, IFRS. Let me see. I'm reading your message, Fawaz. I don't know if I'm pronouncing your name correctly. Fawaz, help and care. Okay. You are part of the health care course in health and care diploma. To be honest, I don't. I'm going to give the models for accounting and finance diploma and business and finance diploma. I'm not going to give the models related to your course, that is health and care, if I'm understanding properly. But please, can you send a message directly to the school, because I don't know why you have this link to take this session, but the advice that I could give you is, can you send a message or can you call to the school directly, because I don't know if you have this model in as part of your diploma. So please ask directly, but if you want to stay here, you are more than welcome. So, but yes, I'm not sure if your course considers this model, because as I said, I'm teaching the models accounting and finance and accounting and business management. Sorry. So okay, so we have these examples of assurance services, but we can have multiple examples of assurance services, and maybe you can go again to these pages that are created by the Big Four firms, or maybe another audit firms, because I'm pretty sure that additionally to audit, all the audit firms have additional assurance services, no? Like, for example, this that I have mentioned. What another assurance service could you mention? For example, Anna's, do you know something about assurance service? Which other service could you imagine that are related to assurance?
I just suggest the healthcare. Maybe we can see something, because actually I'm now just working in the healthcare.
Mm-hmm.
So in finance department, sure.
Mm-hmm.
But assurance, actually, I don't have. I mean, audit, okay, but assurance,
Mm-hmm.
that's the reason. Or actually, just I attend because I don't have about IFRS. I have got it. I certified IFRS.
Mm-hmm.
But for assurance, no, actually, I don't have knowledge about it. If you
Assurance.
can, Doctor, just you can explain more about assurance, or like.
For example, have you heard about, for example, in healthcare, you have a problem. What would you say that is one problem in your field in healthcare?
Like you, what do you mean, in finance or in general, like administration or registration, whatever, patients or
Yes, in finance,
whatever?
in wherever.
Okay, like we can say, like for the appointments, sometimes, like, patient going to doctor, then doctor, like, take much time, so the other patient will be waiting, like, so it will be some issue, like, okay.
Okay, so an example of assurance service could be if the company in which you are working, think about hire external party to solve this problem, maybe to create a very effective process to give a faster response between the doctor and the patient in terms of appointment. Maybe the assurance service could provide recommendations about how it could improve a control or a program to give a more effective service to
Yeah,
the
perfect.
patient.
So it's like okay, it's like we can say like outsourcing or whatever, third party. So this is the meaning of assurance. So like to solve the issue, it's like team or whatever, like, like a group or company, whatever, that they are like a professional area, or they are coming very specialist. They know what exactly the solution for regarding this, and they, okay, so they give like procedures and practice, even for like the nurses or whatever, the doctor, they can advise. So even for the receptionist who is receiving the patients, so they can give like full cycle regarding, okay, perfect. Yeah,
Yes,
yeah, I got it. So this is the meaning of assurance
exactly,
service. Okay,
exactly.
okay.
So, and keep in mind that assurance service all the time look for mitigate risk, or maybe in the company, maybe in the hospital, they have internal controls or a certain process. And assurance service are going to validate if the internal control or if the process that are currently working in the hospital are effective or not. No, in order to identify and mitigate all the risk. So basically, these are assurance services.
Perfect.
Okay, so uh, for example, we have here obviously the example of Anna's and the information that he provided us to exemplify the assurance service was very great, because the example that Anna's told us was in the real life. But let's see, let's review another example. Imagine that we have a company, no, that is a public company that is recognizing the revenue very early. And obviously, this public company, the financial statement of this public company needs to be to be consulted by all the investors. So imagine the public company is interested to present a very good and very strong results. Why? Because the result of this company are going to be presented to be reviewed by all the investor and by all the public in general. So maybe we detect that this company has a very suspicious behavior in terms of recognizing all the revenue. So maybe the administration of the company could look for assurance service to review if the recognition of the revenues are according to a certain regulation. In this case, according to IFRS, or I don't know, US GAAP, or any specific GAAP. So assurance service, a team of assurance could go to this company to review if the company is presenting the incomes and the revenues correctly, because maybe the management of the company detected some suspicious behavior of this company. So basically, this is an example, no? When the assurance team is going to this company to see if the reports in terms of accounting frameworks are good presented or not. And yes, this is one example that is, I feel that is very clear, and this example complements the example that we review with Anna. So to give very clear example, you can read this slide. So now we review what is assurance. Now we are going to review what is audit. Audit etymology, the etymology of the word audit comes from a Latin word that is audire, which means to hear. And why to hear? Because the first time in which I review the etymology of the word audit, I was thinking that maybe audit could be maybe reviewing or supervising or other word, but not to hear. But why audit comes from the word to hear? Is because in the medieval times, auditors in Britain used to hear the accounts that normally the personnel in charge of the accounting department read in loudly. So to detect if everything was according to the law, or if all the things that the accountant read makes sense or not. So for that reason, audit come from the word to hear, because yes, auditors in Britain used to hear all the record or all the bookkeeping to detect if the things made sense or not, and also detect if things that maybe could give a sign of fraud. And in the United States, audits were viewed as a verification of bookkeeping detail that it's more related to the work that nowadays an auditor used to do. No, is a verification of the bookkeeping. in detail. Obviously, audit has been improving during the time. So audits nowadays not only look for detect fraud, or they are not looking for review the bookkeeping details. The audits are more related to add value to the company. And do you think that currently the main function of the audit is the detection of fraud? I don't know. Let's see who we have here. Okay, so normally, normally in the past, this was one of the main functions of the audit, the detection of fraud. So many of the many people thought that the audit was useful to detect frauds, but this is not true. Obviously, as part of the process of audit, we can detect frauds, but it doesn't mean that is the main purpose of an audit. If we as an auditor, we can detect fraud, it's good. But if maybe we, as an auditor, we can practice on audit, and maybe we won't detect a fraud, that is fine too. So the main purpose of a audit is not to detect a fraud. So this is maybe a consequence of audit, but this is not a purpose.
So Doctor, can I add a point here? Can I just say something regarding
Yes.
the audit? The audit, one of the points that this is regarding the fraud. But the thing is, audit actually they like example like external auditor or internal auditor. Both of them they are like in finance. So they are coming and doing this audit regarding to make sure that the accounts or the finance, they are working on the correct way. They are following the standards, accounting and finance standards. And also in the same time, now there is a difference between internal audit and external audit. Internal audit, like they are making sure, example I will give, like for the petty cash, they are okay, he's working correct, they are checking like the invoices, the miscellaneous, too many things. They are to make sure that also like example, the accountant, the expense, example, this expense he added in the correct place. Like example, fixed asset, is it really fixed asset, or is it like a normal expense? So all of this that audit they are responsible about. So this is, I think.
Yes, are right. So at the end, help us to know the things that the company possess, or in terms of financial statements, or in terms of internal control, are the true, no? Or if these things are not the true, how could do to present in a correct manner? So yes, thank you, Anas, for the comment. The main objective of the audit is not of the detection of fraud. I would say that this is one of the results, or this is one of the consequences of an audit, but this is not. Okay, so concept of audit. As we review the concept of assurance, now we are going to review the concept of audit. In many literature, we can find different concepts of audit, but I like these three because basically they contain all the characteristics of our audit. So the first one is very simple, very easy to understand. Audit is the examination of or inspection. So audit is a synonym of examination or inspection of what? Of books, of accounts, or this is important, or internal control. So audit is not limited only to review books of accounts, or is not only limited to review financial statements. Audit is an examination of internal controls too, made by an auditor. No, this independent part called auditor. An audit, the second concept, an audit is an independent examination of financial information of an entity in order to express an opinion. So in this second concept, we find a concept more related to external audit. We are going to review the difference, but this second concept is very related to external, because we are in the second concept, we have this term financial information to express an opinion. So in this second definition, we have this word, financial information, only financial information. And the third concept of audit is a systematic process. I like this concept because we have that is a process that is systematic. It means that we cannot say, okay, I'm going to do the step number 1, and then step number 7, and then step number 6. No, we need to following a process in order, which allows by collecting evidence. We need to have evidence. In this process, we need to collect evidence in consistency with established audit criteria, requirements, policies, and procedures in the organization. So these three concepts is telling us that is a systematic process in which we need to collect evidence to prove that the company or the firm of a business is following the law, is following policies, is following practice and procedures. No, this is our established criteria. So I underline these important phrases that you need to keep in mind. The examination of the audit is examination or inspection made by an auditor, is an independent opinion, and is a systematic process in consistency with established audit criteria, requirements, policies, and procedures in the organization. And why is important an audit? First of all, because the audit helps to examine, control, and monitor the economic situation of the company. It means that audit is not only to see if everything is going to is taking the correct way. No, it's to improve and reinforce these parts that maybe the company has. So we are talking about in this first bullet about the present and the future. So it's important because we are, as an auditor, or the company could monitor it present and give the solution or give value in the future. And it's important too because audit helps to comply with specific frameworks. Imagine again a public company that needs to present financial information or very specific requirements in a stock exchange. Normally, how the investors that review the financial statement of this company, of this public company, how the investor could know that the financial information that this public entity is presenting is correct or not. Because this information needs to be audited by an external part, let's see, audit firm, to guarantee that this company is presenting the truth, is presenting the correct financial information, and that the investor could trust in the results of the company. For example, in Securities Exchange Commission, that this commission asks for audit financial statements. Or maybe let's think about a company that asks for a loan, no? And maybe one of the requirements of the bank to give this loan to this company is, okay, but you need to present your audit financial statement in order to give you a loan. So this kind of commitment normally in the business field are called covenants. So when, for example, when a bank sets a certain rules in order to give a loan, these rules are called covenants. What are the things that the company or the borrower needs to cover to get a loan? So these kind of rules are called covenants. And the third one, and that obviously is important too, is better decision making by both management and stakeholders. No, when we can see the true or the real scenario, we can take better decisions. So these are the most important things that audit could provide us. Now, we review the basic concepts to start this model. So now that we know the concept of assurance, of audit, what audit is important, now we can start with the topic number 1, that is called internal audit principles. And in this session, we are going to explain the reason for an internal audit. We are going to review internal audit principles. And then we are going to discuss internal audit techniques used by organization, or at least the most common internal audit techniques. And we're going to review the differences between internal and external audits, that even when both are audits, both are systematic process and all the things that we review, we can find different approaches and different views in internal or external audits, because they are based off they look for different objectives and different goals. They cover different goals inside of an organization. As we review, now we are going to see the concept of internal audit. Internal audit is an independent assurance. We have again an assurance. It means that in this internal audit concept is involved a professional with the knowledge and with capacity to give an opinion. And this is an independent part. So that an organization, risk management, governance, and internal control processes are operating effectively. So we have here in the first definition that is an independent assurance in order to know if the internal control and processes in an organization are working effectively. So to be effective, but what are the things that we need to consider that the internal control is operating effectively? So one of the things that the internal auditor needs to cover is a code of ethics. And on one hand, on the other hand, the internal auditor needs to follow international standards. So if we have these two elements in an internal audit, we will have a very effective internal audit. On one hand, code of ethics, and on the other hand, international standards. And we have another definition. Internal audit reviews the entity's activities and services, services and procedures to improve them. So this part is very, very important, very fundamental, because it's not only reviewing and that's it. It's not only to see, okay, your control is good and that's it. No, it's or this area is doing good or bad things. It's not only to judge the activities of the companies. Is internal audit looks for improve the process of the company. It lists strict policies and procedures established by the respective entity and are not limited to financial aspects. It's not like external audit that is more based on financial aspects. Internal audit is more general. Internal audit is not only to see one, for example, the finance team or the finance area. No, internal audit. In internal audit, we can review all the company, all the areas, all the process, all the controls. Is not limited. Is more free. I will say that internal audit we can discover and we can prove and we can see and we can observe the process of the company, not only finance team or the area of finance. Not internal audit is general. And obviously, if we have an internal audit, we need to know what is internal auditor, because we know that an internal audit is to review internal controls, processes, and procedures. But who will review these internal things? The internal auditor. And the purpose and the duty of the internal auditor is provide objective view about if the company if the procedures of the company are effective or no. So overall, the internal auditor needs to be very objective, very independent, without conflict of interest. And he must be independent from the operation. He evaluates and reports because at the end, the internal auditor is the person that is going to have the communication with the highest level of the organization. So they need to be very objective and see the picture of the company with a very specific eyes. Because imagine if there are some conflict of interest, the auditor could think, okay, I'm not going to tell this issue to the board of director, but because this could affect my own interest. No, let's say if an internal auditor is not independent enough, this internal auditor could tell part of the truth of the board of directors. So this is not permitted. An internal auditor should give all the information, all the recommendation, all the observation to the highest level of the organization, even when the things that the internal auditor needs to tell them are bad news. So internal auditor must show bad and good news. For that reason, he needs to be independent. Internal auditors can be engaged in a range of activities, not only internal audits. For example, assessing the management of risk. For example, if we have a company, let's think in a jewelry, which manage a lot of for example, golden or silver or this kind of materials, what would be the main risk? Maybe the main risk is to keep this material or keep the jewelry in a very secure space. So this evaluation, this identification of risk could be made by internal auditor. It doesn't mean that the auditor only needs to practice audits. No, the internal auditor could assess the management of the risk. Also, on another activity of the internal auditor could be give some advices to improve internal control, evaluate risk, analyzing information and confirmation. For example, let's think maybe in a software that provides information. So internal auditor could review this software to see if this software is working accordingly, if this software provides the correct information, obviously to take decision based of true facts. So another thing that an internal auditor could do is probably work with the assurance team. Maybe the assurance team is hired by the company. Maybe the company hired PwC to provide assurance services, and the internal auditor could work with this PwC team. That PwC is an external part, and the external auditor could work with this PwC team to provide maybe information, to provide knowledge, to join efforts. And this is another way in which the internal auditor could work. Is not internal auditor is not only the person that help internal audits. Internal auditor could do many things, all these things in order to mitigate risk. So now let's finish this. Let me see how many slides we have. Okay, let's finish with this slide to go to the break. So internal auditor also mix different kind of skills or knowledge. Is not only the most important, is obviously one of the most important skills is that the internal auditor needs to be independent and need to prove everything, needs to collect evidence, but additionally, an internal auditor needs to have a certain level of knowledge, because remember, the internal auditor is going to be the person that will talk with the executives, with the board of directors, with the highest level in the organization. So the internal auditor needs to have a lot of knowledge and a lot of experience, and he needs to prove, to have all the evidence, because if he talks with the board of directors, and if he doesn't have evidence about the things that he is discussing with these executives, maybe the internal auditor could be the board of director could don't trust in the facts or in the comments that the internal auditor is saying, if the internal auditor doesn't have evidence of this, no. So basically, the internal auditor is like a critical friend that this, maybe we have a friend that all the time he or she tell us the truth, even when the truth is not good, or even when we don't want to hear the bad opinion or the negative things. No, this is the function of the internal auditor, being very honest, but not only honest. Is internal auditor, the function of this guy is to provide a recommendation or possible solution, is the friend that is not, that we have not only to judge us, is the friend that we have to show us the truth, the reality, but the person that he provides a way or a solution to face the problem, or to be better, no, to enhance and to improve our behavior or of actions. So yes, think think about the internal auditor like a critical friend. So now let's take a break, 10 minutes. I went for my coffee, so I hope you have done the same. Okay, so stop share. You can share my screen. And this is an example of a structure of a company. In fact, this is the structure of the Bank of England. So, but you can see, you can consult any other structure in another company. But the thing that I wanted to show you is where we have the internal audit. So as you see, we have internal audit here. That is that one of the things is that internal audit needs to talk with all these kind of executives and high management with the highest position in the company. So internal audit is in the first level of the organization. Even when we have here, for example, a deputy's position, or maybe director position, depending on the organization or the company. But internal audit is here, and internal audit uses this line, that is a line that is not the same like the others line that are continuous lines. This line means that this is a position that these guys, in which the board of directors or the CEO listen this guy. So this guy, the function of this guy is tell this other position how these other areas are working. So this guy could advise, could give observation, could give a recommendation, suggestion, and this guy needs to tell the truth to this board of director, because at the end the board of directors have the faculty to make decisions that affect the whole company. So as we review, internal auditor needs to talk with the highest position in the organization. And if you see now in other slide, we are going to review what is the audit committee. That in the audit committee we can find the internal audit, and in some cases the controller or the person in charge to establish internal controls. So this will be our audit committee: internal audit and compliance. Normally this is a two parts that participate in the audit committee. But yes, as you can, for example, check the structure of the company in which you are working, and always the internal audit needs to be in the highest position with this kind of line that is not a proper line. Why? Because this guy, this internal auditor, is going to report, but additionally to report, he is going to suggest things to improve the value of the company. It's not only reporting and that's it. Or for example, look for this other line that is similar. It means that maybe this position could help this other position with some knowledge. But what is an internal control? Internal control is a process that the board of directors, management, and other personnel needs to follow in order to reach the objectives related to the operation, reporting, and compliance. So is a process. Basically, we know that internal control basically is a process, no, set by board of directors, management, and other personnel. To what? To achieve the objectives of the organization. And we have another definition in order, maybe you can feel that the first definition is clearer, or maybe the second, but both I feel that are very useful. The process designed to help safeguard an organization and minimize risk to its objectives. So it's not only, for example, in the first definition, is not only to achievement of objectives, it's also to minimize the risk. For example, we can minimize, or internal controls could minimize the risk, protecting assets, promoting operational efficiency, that create process or reviewing how the company could adhere to policies, rules, and regulation. So internal control is this part of the organization that is looking for following a process, and this internal control look for all the personnel inside the company follow the rules, or the company itself that follows the rules, that follow the process, that follows the policies and frameworks in order to get the objectives of the organization. And here we have three important things that internal control take into consideration. For example, internal control, correct and secure financial information to take correct decisions. So if we see this picture follows a process, and this process helps to give correct information in order to take correct decision. For example, here we have a basic structure of invoicing process. So someone captures, someone verifies, someone authorize the payment, send to a financial system, and achieve for audits. So basically, this process helps to give correct financial information. Another thing that is important for internal control is safeguarding assets. In this picture, we have this guy that maybe is pretending, tries to steal the things that we have in this cage, but like the company has maybe this control, that the control is this chain. This guy cannot steal the thing or the asset that the company keeps in this cage. So so let's think that the internal control is this chain, or is this part that, or is the cage that is protecting the asset of the company. Maybe other internal control in this picture could be the password to open this cage. Maybe the password only the CEO or a specific person only has the password of this cage in order to protect the assets of the company. So this could be an example of internal control. Another internal control provides efficiency of operation. If we see this picture, in this picture, we have different process, different people in different parts of the world, that maybe it's better because maybe this is a logistic process. Maybe it's more convenient if we have a certain person in each location to be more efficient, to attract more customers, or maybe the company needs a specific program to connect a different location around the world. So for that reason, maybe these people share the same system, the same logistic system, and this logistic system and the way in which this system works is internal control too. And now this is also important, this slide, because now we are going to see the reason for an internal audit. So now we know that the company has internal controls. We know what is an internal audit, what is an internal auditor, but what are the reasons to have internal audits? What are the benefits of internal audits? The first one is strong internal controls. As we have seen in a lot of slides, one of the main things that internal audit tries to cover is to evaluate internal controls and see if they are working correctly or not. Other thing is being efficient because obviously when an internal auditor review a process, at the end of its review, the internal auditor is going to give a recommendation to optimize process. And if the internal auditor could give this kind of recommendation to optimize and to be more effective and more efficient, the company can save time and money, both resources. Security. For example, nowadays that is very important to have a very strong cybersecurity environment. Internal auditors could review this security in the system, because remember, internal auditors are professional that not all the time needs to be accountants or maybe lawyers. No, even internal auditors could be a specialist in IT, or maybe a specialist in a certain area. Not all the time they need to be audit accountants or people with finance or accounting profiles. No, even they could be maybe engineers in IT or something like this. So the third reason to have internal audits is security in terms of data, in terms of information, in terms of networks. So this is an important point, to have internal audit, that we are protecting all the data that the company belongs. So basically this is security. The number 4 is integrity. Integrity, this reason is related to if the financial statements, or in general all the information of the company, is presented with a certain accuracy, if it's presented completely and according to the reality. So this is integrity. This is one of the reasons to have internal audits, that the shareholders could believe in the reports that the company is presenting, because this control to have this information has been reviewed by an external part that provides this level of assurance to trust in the information. Another is reduce risk. When an internal auditor is reviewing, he can identify risks that maybe these risks haven't been covered. So internal audit could be the way in which the company could find these gaps, these gaps with risks that were not covered. And obviously, if the internal audit detect these gaps that are not covered by internal control, the internal audit could help to mitigate this risk in these gaps. And the sixth reason is improved compliance, because it's a very good signal that the company is sending, not only sending to the employees inside the company, even in sending to the investor or sending to the external parts, to say that the company has a very huge commitment to follow rules, to follow procedures, to follow the standards in a certain industry. So internal audits are good to send a better signals, not only inside the company for the employees, but also outside the company for investor or maybe regulators. And as every part of the audit, or maybe for all the models or all the fields, we have a certain set of standards or a certain guides that could help us to know how to implement a best practice in a company. So in the case of internal audit, the Institute of Internal Auditors published a practice guide called Demonstrating the Core Principles for the Professional Practice of Internal Auditing. Basically, this framework is a guide in which we can see what are the requirements that the internal auditor needs to cover in order to give audit with a very huge quality. One of these, obviously we are not going to review all these principles in depth, but at least we are going to review the principles, and I'm going to give you an overview of each principle. So the first principle that we can find in this framework emitted by the Institute of Internal Auditors is that the internal auditor needs to demonstrate integrity. It means that the internal auditor needs to be honest and needs to be very objective. And I have already mentioned, but now this framework is telling us the same, but now this part in which I was telling you that the internal auditor needs to be honest and objective and give an unbiased opinion is written in a guide emitted by an international body. Is not only something that we infer. No, the honesty and the objectivity of the internal auditor, now these kind of characteristics are written in a set of standards, in a set of principles that most of the internal auditors need to cover. Number 2 of the principles of this framework is demonstrate competence and due professional care. And basically, these principles talk about the knowledge that internal auditor needs to have. So, for example, the principle gives us a key indicators to see if the internal auditor are covering competence and due professional care. Because the ability of the internal auditor, he needs to have the knowledge, the sufficient knowledge, because even when he is reviewing internal control, he needs to know what are the other sources that could affect the company. It's not only review the company, it's maybe consider external factor or the environment of the company. So for that reason, the internal audit needs to have this ability in order to perform the audits. And other important characteristic that that is related to this principle is the skills that in terms of communication that the internal auditor needs to have, because remember, the internal auditor will be the person that talks with the executives with the highest levels of the company. So the internal auditor needs to have this skill to give the solution or give the recommendation or give the problematic situation in a very clear manner. The third principle of this framework is related maybe related to the first principle, but this is more focused on the chief audit executive. This principle said that the chief audit executive, I mean, when I talk about CAE, I'm talking about the head of the internal audit team. So this principle said that this guy needs to be very, very independent of the management. So remember, in a normal structure in a company, in the highest level, we have the board of directors, then we have the management, and then we have maybe other position. Management, I mean, the head of every area. Maybe we can find the invoice area, finance, maybe human resources, I don't know, multiple areas that are below of the highest level of the organization. So the chief audit executive needs to be independent of these areas. Why? Because at the end, the chief audit executive is going to review the management, and according to the results of its reviewings, the internal auditor is going to communicate all the issues to the board of directors. So this objective is related to how if the independence of the auditor is appropriate if we compare with the management areas. Is the internal auditor totally independent of these areas? Because if it's not independent, this is a problem of maybe conflict of interest, because at the end, internal auditor is going to review if the management is doing the correct things or not. And number 4 is aligned with the strategies, objectives, and risk of their organization. So this principle is important because the internal auditor needs to knowledge the necessities of the company, and he needs to know about the objectives of the company, the mission, the vision, because at the end, this is a guy that is going to review everything. So, and this is a guy that is going to plan which areas are the most important in the company, on which areas needs to be reviewed according with the strategies of the company. This is a guy that is going to develop a plan of revision, of inspection. So even this guy or this team, internal audit team, plan the audits that needs to be held in the company, but Even this team can adjust the plan according to the necessities and the strategies and the objectives of the organization. So this internal audit team or this internal auditor leader needs to know a lot about the company. The 5 principle of this framework is appropriately positioned and adequately resourced. As we have seen in previous slide, the Chief Audit Executive reports directly to the board. So he needs to have all the evidence to prove the board of directors the issues of the company, or to give all the view, to provide all the view of the issues or the observation or the deficiency that he has detected. And generally, this Chief Audit Executive report the board of director or the CEO of the company. No. And number 6, finally, he needs to communicate effectively. It means effectively is not only communicate all the issues and that's it. He needs to know what is the information that the board of directors of the CEO of the company could need. It's not communicate everything, but is communicate the specific issues or the specific points. Is this internal auditor needs to know how the board of directors could do could plan an improvement in the organization. Maybe this internal audit detected a lot of deficiencies in a process, no? But probably the internal auditor is not going to report all the deficiencies. If he detects 10, maybe he could say, okay, I'm going to say that this control needs to be improved. I'm not going to report every efficiency, the 10 deficiencies, because he considered that maybe the board of directors are people that they don't have enough time. So he needs to communicate in a manner in which he can impact, but at the same time, he needs to select the correct information to be provided to the board of directors. And some internal auditors techniques used by business organization. There are numbers of techniques that the auditors can employ, but for example, one of these some internal auditors could aim to prevent incorrect or illegal action from taking place. Maybe they could recommend increasing securities in software. Another techniques could be more based on modify a process. Maybe one could be more related to automate with process related to software and automatization. Another could be recommendation about how to improve process with manual and automatic process, no? As we see here in the example, no, auditors may recommend increasing the security of a software. How? Maybe increasing the number of passwords, no? That this recommendation is very related to automatization or with IT processes. And other techniques, like for example, ask to modify a payroll entry if they believe that is wrong, that this is an example in which the technique of the internal auditor is more based not only in the automatic process, is also this recommendation takes into consideration maybe certain things about manual controls. Maybe the person that is giving the information to the payroll, he needs to have more knowledge about the payroll or about the taxes related to payroll. No, as an example, no. So take into consideration that both recommendation and both techniques, the internal auditor can do can use both techniques, recommendation based on more automatic controls or more in manual controls. And one of the most famous frameworks, as we see these principles demonstrating the core principle for the professional practice of internal auditor, that this is a framework. Another topic that I would like to show you is this framework that was emitted by the Committee of Sponsoring Organization of the Tradeway Commission, COSO, that was emitted in 1985. COSO is the most important, let's see, framework, let's say the most important frameworks that most of the organization use to create an effective internal control environment. So COSO basically is a framework. Basically, COSO is a guide, is a template, is a set of rules that most of the companies use to create an internal control environment. And this framework considers five different steps or yes, or stage. One of these is that first control environment. Basically here the internal auditor needs to review all the environment in which the company is working, considering industry standard practices. Maybe in your case, or in most of the cases of you, I don't know, maybe medical care or hospitals, or maybe this field has different standard practices. So basically the internal auditor needs to know these standard practices. He needs to know what is the environment in which probably an hospital is operating. And when the internal auditor can see this environment, he can know what are the most important risks that the company faces, and help to mitigate it, to mitigate them. Another stage of this COSO, that is a framework, is the risk assessment and management. And in this part of in this point, normally internal auditor evaluates how the company follow the practice and procedures and the policies that, for example, if an employee has a very huge commitment to follow the rules or not, to follow the policies inside the organization or not. So for that reason, the internal auditor needs to assess the risk and assess the compliance of the employees in order to obviously again mitigate the risk. And additionally, in this state, is not only to evaluate the compliance of the employees, is to evaluate what are the external factors that can be a risk for the company. And in the third stage, we have control activities. Maybe the company cannot avoid the risk, but in control activities, the internal auditors review how the company is acting to protect itself against the risk. Maybe we cannot eliminate a risk associated to, I don't know, maybe political issues or economic issues, but at least the company can set certain kind of controls to mitigate the risk or to prevent the risk or to be ready if something happens. And the fourth component of this framework is information and communication. Here we have that internal and external communication adhere to legal requirements, ethical values, and standard industry practice. Here in information and communication, the internal auditor is worried about how the employees, including the internal auditor, could cover, for example, ethical values, for example, code of ethics, but also how the company is covering with certain standard industry practices. For example, let's think in a certain industry, in banking industry, information and communication could be how the company or how a specific bank is reporting to banking regulators. How is the commitment of the bank to report with the regulator? So this, and how is this communication? So another component of this framework is information and communication. And as last one, but not less important, is monitoring. If the internal auditor monitor, and if the internal auditor review, not at the end of the year, for example, if the internal auditor is reviewing constantly all the commitment with the compliance of the organization to the internal best practice or to the internal controls, the internal auditor could detect some deficiency and could create better recommendations, because obviously all the time situations are changing. So the activity in the organization all the time is very dynamic. So for that reason, the internal auditor needs to monitor all the time if the commitment of the company with the internal control policies and procedures. And to finish, we are going to finish this topic with this slide. I'm going to explain the difference in both audits. So we are going to finish with this slide. To continue next class with the next slides. So types of audit. We have on one side external audit, and on the other side internal audit. The first difference is the objective. The objective that look for external auditors or internal. Why? Because the objective in external audit is express an opinion based on financial statement, based on financial figures. And in the case of internal audit, it's more associated with internal controls and their performance. Other thing that makes different internal and external audits is the moment, because in the case of external audit, this is based on the past, because at the end in an external audit we are going to review the figures related to the previous year or previous years in a certain time, because if we review financial statements, and normally in the headline of the financial statement, they establish financial statements at 31st of December of 2000 and something, no? So it means that the figures that we are observing are in the past in a certain time, let's say 31st of December. But in the case of internal audit, the internal audit is more concerned about the present. How are the controls working and how the controls could be better? So the moment could be, we can consider the present and the future. Another difference is the audience. Normal external audits, the result of an external audit is useful for investor and general public, probably regulators, because are the parts that used to check the financial statements to take decision. But in the case of internal audit, the reports that internal auditor provides are useful for the board of directors, for the executive management, some cases regulators. And other difference is framework use. In the case of the external audits, we have international audit standards that are a set of rules that contains all the requirements that an external audit needs to cover in an external audit. And in the case of internal audit, they have a framework that is called International Professional Practice Framework, or for example, they could follow the COSO, the framework that we review. So in the case of internal audits, they could follow plenty of options. And another difference is the personnel. Normally, external auditor is a firm that is hired by the company. It means these firms provide services. It's like for this firm, the company will be the client. For the company, the external audit firm will be a provider of something, of services. But in the case of external auditors or the external audit, even when the internal auditor is an independent part of the organization, at the end, the internal auditor is an employee of the inside the organization. No, this guy works in the organization, even when he is independent of the management areas. But both internal and external audits are worried, are concerned, and they are very helpful to protect the value of the organization. So both of them add value to the organization. So in the next class, we are going to review the difference between international frameworks, and we are going to continue with this